Hello and welcome to this interview with Zinzino following the Q3 report. My name is Niklas Elmhammer and I'm an equity analyst at Carlsquare. And I'm very happy to be joined today by Dag Bergheim Pettersen, CEO at Zinzino. Welcome, Dag. Great to have you here.
Thank you, Niklas. Good to be here with you.
So I believe you have presented the Zinzino story on several events that we have arranged, but maybe if you could just recap why you think you're in an attractive market and why you see your position for solid, profitable growth.
Thank you. Well, I've done that several times, but I'm happy and glad to do that again. So first of all, we are 19 years old this year, so celebrating 20 years next year in the direct sales. We stumbled across preventative health product 13 years ago and invested pretty heavily into that market and that segment. I think that is a perfect position to be at over the next decades when you see the world is changing and the habits and the recognition that you get from people who wants to live a healthier lifestyle. And on top of that, we acquired a company 12 years ago that invented a test where you are taking a blood sample, checking your balance of fatty acids. And since then, we have developed a couple of other tests and are in the future probably going to launch more tests. So we connect the dots between preventative health with a test, and in the future, more coming tests and products to help you live a healthier lifestyle. So that is, then of course we are on the Nasdaq First North in Stockholm, have a track record of 19 years of growth. We paid out dividend 11 years in a row. Maybe I should stop bragging about Zinzino and let you ask other questions, but that's the short story of Zinzino.
Okay, thank you, Dag. Great. But let's then discuss the Q3 report. As you previously reported, Q3 was another strong growth period with growth about 20%. What were the main drivers this time?
It's many things, but in most of what we do is thinking long term. So it's customers, new customers coming in, trying to get the customers to stay. We opened a couple of new markets. We added some more products. We have done some acquisitions. So it's a little bit of everything, I would say. In the growth of Q3, I would say last year and this year, we have done some acquisitions that added a little bit to the revenue in certain markets like France and Spain and UK, US, Taiwan, and those markets, Mexico also, those markets of course is helping us on the growth for Q3. In general, it's a lot of good things happening in most of the markets.
Sounds good. And apologies for being a bit short-term here, but what can you say about Q4 so far? I mean, you already reported strong growth in October, I believe.
Yes, we've done that. My expectation is to deliver on the expectations that we set out earlier this year, and we set 20% growth on an average over the next years. And also pretty good financials. That is the aim, and delivering upon those expectations is my aim. And if we can deliver over that, that would be good and helpful for the next upcoming years. Short term, Q4 will be another strong quarter, in my opinion.
Okay, great. And admittedly, you performed very well in your existing markets already. At the beginning of the year, you stated a goal to establish 3 to 6 new markets, I believe. Could you elaborate a little bit where you are in that process?
We have launched one more market this year, like a really totally new market, and that is the Serbian market. And then we've done some adjustments in two strong markets, which was necessary, and that is Switzerland and France. On top of that, we have opened up sales in Canary Islands more into the system. It's Spanish islands, but it's working a little bit outside the Spanish mainland. So we've been focusing on the existing market this year. Last year, we launched Turkey and Mexico, and it was and has been a lot of focus on that. So we are a little bit lagging on the 3 to 6 is a little bit how you describe that. But next year, we are putting more effort into the mainland China. We are in China today, but in a very inefficient way. So that's one of the aims. New Zealand is also on the map. The Philippines is also on the map. But one of the focus areas for us is to do the existing markets fantastic and growing them. And then we have certain markets that we have started to have some revenue. So that is the second focus. And the new markets comes as a third. This year is the year where we had some good growth in US, and that is a decade after we launched the market. So it takes time to do that profitable journey, so to speak. So existing markets will still be our main kind of focus.
So it sounds like you're busy with existing markets and new markets as well. So, but at the same time, looking at the report, margins are somewhat behind compared to last year. What are the main headwinds, you believe?
I would say I'm pretty happy, and it's above the expectations that we set out in the earlier of the year. So I think last year was a little bit to the extreme part of good. So we had higher margins last year, so it's hard to compare those margins per se. But inflation is one key. We have also invested a little bit more into certain markets and certain territories, and also acquiring some companies. That comes with a cost. So all of these things are adding towards the cost. So early this year, we had acquired customer base and a database from one US supplier. That was in Q1. We acquired another company in Q2. We invested in our olive oil factory in Q2 as well. So, and all of these acquisitions and those added costs are compared to last year a little bit on the higher end. It's still, I'm still very satisfied with the margins, and it's on the expectations that we set out earlier this year. But of course, if you compare them to Q3 last year, it's a little bit behind that.
Okay, thank you. And looking a little bit ahead, I mean, in the report you mentioned higher raw material costs. Going forward, do you see any material changes to the raw material situation or price adjustments?
I'm hoping actually that that it will actually drop, and there's a couple of indications that some of the raw materials and inflation will be a little bit adjusted, hopefully for us. We own a factory, so we have a pretty good view on how these changes comes into play. Of course, the inflation, it's something that you can't control yourself. Hopefully, we won't add too much price increases to our customers and partners. That is unhealthy in itself. So we need to work on our own cost base. We need to have scale advantages, which we do when we are growing like we do. So I'm actually looking pretty bright on the future when it comes to these things. But remember, one of the things I didn't say is that we have quite high ambitions. So for us, it's a long-term war, so to speak, on growing the business, getting the scales, and then you will get a bottom line that is relying on the growth. and the scale of the business and the performance in general.
Okay, good. And linger a little bit around the cost item regarding operating costs. You have mentioned that you're investing in growth. Could you elaborate a little bit on your initiatives there? You mentioned some of that, but is it mainly new markets or is it other investments, initiatives?
Oh, there's other investments on top of that. So new products, we are putting a lot of effort into new tests, and we are putting some effort into new studies of the products, make sure that we have proof of concepts. And there goes some extra money that you don't see as a return on investment for a short term. Technology, we are investing in a new ERP system. We are investing in the web shop, in the technology behind the scenes. We actually have 47, soon 50 employees on our tech department working on the back office in the web shop and all that. And those things doesn't give money right here, right now. That is a long-term investment. And then I mentioned acquisitions. So sometimes you see that the acquisitions in itself have a certain cost, but sometimes, and not sometimes, even always, there is added costs directly taken in Q3 and Q2 and Q1 based on getting the success out of those acquisitions.
I see.
So we get the growth, but there is some extra costs connected to it.
Yeah, that makes sense. And going forward, are you planning to? How should we view the intensity of your growth initiatives? I mean, you mentioned that you're looking at several large markets already.
Oh yeah. So we're aiming for 20% growth next year as well. I'm pretty confident that has to be the next year's goals as well. Some say it's too low, so let's see how it goes. We have some announced acquisitions. One of the things in US that we have been working on for quite a bit of time, and we announced that in June this year. We're working intensely on that acquisition now, and that if that comes into play, then the growth in US will be significant, and we will be a totally different player in the US market, which is a door opener for other, I would say, growth scenarios in Canada and in Mexico and Latin America also. So I'm pretty hopeful to see that we can do and take a bit of the preventative health market for sure.
Okay, you mentioned Zurvita there. I guess many of those who follow Zinzino are eagerly awaiting news. What can you say about the current status?
The only thing I can say is that the US laws is a little bit different than the European. I think we could have done this on this part of the world, on the continent, a little bit faster. But we have been into professional due diligence that have taken a little bit longer than we expected. Contracts and agreements have been forward and backward a lot of times, and a couple of things have happened during the way. But we are in a positive process of making it happen. So you need to be patient and professional at the same time, and not give up on that side. So I'm hopeful to conclude on these things within the next months.
Okay, that sounds promising. So we're looking forward to follow your continued expansion efforts in Q4 and beyond. And thank you very much, Dag.
Thank you, Niklas. Thank you for having me.
And thanks everyone for watching this Zinzino Q3 interview.